How you doing?
Good, good. Just yeah, just hanging out, just looking at the market, doing a few things at home, and just taking it easy, bro. How about you?
Yeah, no, all good. Pretty much the same. Just keeping an eye. There's some Fed speak now unfolding. There's quite a lot of it, which is funny. It's very unusual for them to schedule so many. I think it's probably a
Yeah, I've
telling
seen that.
sign of something. A bit of the perfect storm for gold right now, isn't it? News was decent for the dollar. GDP,
Yeah, so
jobless claims,
yeah,
not so bad. Nothing
I
frightening
mean,
for the markets.
everyone had a decent day from Mr. Dan's point of view on gold. That was 200 pips, and I think it was dropped another 150s now. So um, we have the bullet points, don't we, George?
We we have a breakdown for the news today and then news from the previous weeks and then what we have coming up next week. So it's quite packed at the moment, to be honest. We've got NFP next week. Of course, we had
Okay.
the rate cuts last week, which we've seen the effects of in the markets. But yeah, no, we can touch on today. As I say, we'll get more of an indication, possibly from the Fed speech today. We've got a few of them speaking, Collins, Kugler, and Powell himself. But yeah, I would say for the dollar, it wasn't so bad. We've seen the initial reaction, quite a big pullback actually. So what we were talking 200 and something pips. But I don't think that changes the dynamic or the narrative surrounding gold whatsoever, to be honest. If anything, there's more
Oh, yeah,
weighing on it
100%.
right now.
Yeah,
We
I'm
have
watching on the other
this
screen.
development in Lebanon. I would say for the time being, if they can strike some sort of, I would say peace deal, but it's not very peaceful at all, is it? If they can go down the diplomatic route and try and avoid a ground invasion, then, but regardless of that, I think with gold right now, there's so much physical gold being hoarded behind the scenes. There's an all out, I wouldn't
Yeah,
say
I feel
war, but
like
yeah, there's a huge collection going on right now.
two sevens, I think, is next. Well, there's no real point of price that you can put into perspective. It's just like more or less wear and tear type action. Um,
Absolutely, it's
you
in,
say you
yeah,
wanted to share your screen, Jordan?
yeah, I can share my screen. I would say
Go on.
for yourself, you could share the screen regarding gold technicals. And
Yeah,
then yeah,
yeah.
let's just have a look. Let's just have a look at previous news we've had today, etc., etc.
Go on then. You
Uh,
you start with that, and then I'll jump on with the chart up there. So I was watching it now. Okay, okay.
Let me know if you can see that.
Yeah, go on. You good?
Okay, so okay, cool. So actually, I just want to have a look at the DXY quickly as well because this is in such a precarious position right now as well. So I do
Yeah,
think
that's
we're going to
good.
see some sort of, yeah, I think we're going to see, you can have, without stating the obvious, we're trapped in this range. And I would say the dollar's kind of holding up the DXY, the basket of currency, is purely down to the weakness of every other major currency as well. The euro is pretty much shot right now. The pound is surprisingly strong, but not really. So it's going to be interesting to see if we can get a break from 100, sub 100, and the effects of that. But personally, I think news-wise, it's not been so bad for the dollar, and you can see that reflected here in gold. But yeah, let's just hop on to, bear with me. So yeah, we've had, as you can see, the speech here. I need to actually tune into these and catch up, but we'll do that after. So yeah, jobless claims, as we know right now, the labor market is the main focus. We have, of course, inflation, interest rates, etc., etc. But really, people are waiting to see, are we going to have, I would say technically we are in a recession. They just don't want to spook the markets pre-election, which is another thing weighing heavily on the markets right now, the uncertainty surrounding that. So everything, in my opinion, is focused heavily on the labor market right now. Is it holding up? And we hear this narrative of the soft landing, hard landing. But the reality is, does a soft landing exist? Every time we've had a global economic downturn, it's been a quote unquote hard landing. I think once or twice in the last, 40, 50 years has it been achieved. So my expectations for that being achieved are pretty, low to zero. So this is the main focus right now. Any labor data, any labor market data we have coming out, that's what we need to be heavily focused on. And the question is, does our opinion on gold and the um, bias change? Not really. I think still buying the dips. I can speak for myself. I'm sure it's the same for yourself as well, Sean. So the only
Yeah.
thing we're going to see driving these pullbacks are labor data figures, as we've seen evident today. So that's my main focus right now, is continue to buy the dips. I think last week, let's touch on that briefly. We've dropped it into the fundamental section for you guys to have a look at the breakdown as well. But me personally, I was quite expecting that because, in my opinion, they moved late to the rate cutting table. I think they should have gone in July. So in essence, they've just caught up with what they should have done the month before. Personally, I think if we do see another 0.5 cut in November, we only have 2 meets left now, November, December. I think that could spook the market slightly. So I do expect them to follow through with a 0.25, and then going into next year as well, probably another % at least, I would have said. So yeah, just to reiterate, right now, labor market is the main focus. So unless we see an absolute surge, unemployment come down, which, to be honest with you, I think the Fed are happy with the rate it's at now, around 4.2%. That was always their target, which historically is not actually so bad. You see 4.2% if you go back to the previous economic crisis. 4.2 is actually, the target they've aimed for and tried to sustain. So unless we start to see that number creep substantially higher, then, I don't really see, I don't think it'll spook the markets too much, put it that way. But at the same time, the dollar's shot, and I do believe the Fed has been politicized heading into the elections.
So what do you think is going to happen in the next, the whole entirety of the final quarter overall?
Personally, I wouldn't be shocked if we see gold reaching $3,000 per troy ounce, personally.
Yeah.
But at the same time, we have to ask ourselves what would be the catalyst to provide a complete reversal in the gold market, i.e. start heading back down towards, let's say, 2000.
Yeah.
I just don't see it. I can't see it anywhere. I think for that to happen, we'd have to have peace in the Middle East, because that's weighing quite heavily on it right now. There's a few other conflicts which the markets do price in over time, and unless they get completely out of hand, they get absorbed. So yeah, to answer your question, I would say I can see us going only higher. I think there's going to be a lot more events between now and the end of the year, especially surrounding the US election. We've seen already it's not smooth sailing, is it? And as we well know, they deploy many tricks. So it's going to be interesting to see what happens. I would say, how many days out are we, or how many weeks out are we? It's probably around 6 weeks now from the US elections. So I do expect there to be some desperate attempts to sway the outcome between now and then. So for me, gold 3,000 year end wouldn't surprise me at all.
Yeah. Okay. Cool. Sounds good, man. Nice speech over everything there, Jordan.
And as you said, technically, we're sort of in price discovery right now, aren't we? With gold, it's very, I won't say very difficult, but it's more of a challenge to call the upside, right?
Yeah. As you can see there, but I can roll through a few things. I'm more or less concerned about the daily time frame. How this
Do you want to hop back onto your screen? Sorry.
I can do, yeah. I can pull this up.
Oh, I'm gonna stop. Yeah, the daily is very interesting right now, isn't it? The momentum is.
Okay, so can you see that? Yeah.
Yeah, perfect.
All right, so yeah. Firstly, let me just pull up the 3-day on a clean slate. Now, 3-day time frame over here, as you can see, huge boost, huge moves. We could have another. We've got 1 day, 7 hours left, but I'm just looking to see if, okay, so we've got one push, okay, stabilization, another push, we might get another stabilization before it continues. So it's all going to come down to, obviously, the next 24 hours on that closure. But if we do come a little bit lower on this 3-day, anywhere in between, I don't know, 25 to 30% of the prior, then we might push down back into this region of 2,600. And I've got a few other people who are looking at the same kind of concepts, but again, it comes down to this weekly closure. So look at the week here, overall, measurement-wise. Okay, so we've got 1 to 2. Okay, let me just measure that. 700, no fuck. Yeah, that's a lot. I mean, 600, 700 pips a week overall on the runner. Even if it does pull back, it could do 300, 400. Now let's look at this technical imprint. Now we just focus on this, the upper echelon over here. What I'm looking at is what's really, really converse right now, especially with some of the news, is that we have the daily high. Yeah. Then we have yesterday is the breach of it. So I put the other daily high on there as well. And what I'm really looking for, like suggestion wise, is can you see the spikes? We've got 1, 2, 3, 3 spikes. If this is a manipulation factor, so the manipulation model that came out prior to the news was obviously the push higher, 200, 250 pips. And if we actually close below this first initial daily high here, so 2,664-ish, we could really start to come back into this arena. So the overall upper area of volume, this is the 3-day. So 3-day volume, okay, let me just tighten that. So 1 to 2. So the 3-day volume from there to there, this is the entirety of this volume thesis. And overall, as mentioned, if we do roll, we could come into the mid region of that. So I've just kept that on the daily. And yeah, it's all, if you look at the lower time frame, there's a little bit of a 50-50 concept with that daily coming down. So this is where like we need to really stay focused and watch out, especially if we're going to be looking at shorts. We have this simple as trend line over here, which I don't really use too much. But what we want to look at, I've copied and pasted that daily over. So we have 1 point of manipulation coming back through, and that was forced up at 2 a.m. So that was pre-Asia. Then over here, the high was made. The high was made at 12. So we're looking at like mid London. And it all comes down to how this is going to operate and roll from here. So if we look at some of the small points where we can see the volume being placed and also pushed into, so we have here, we've come back into the mid ranges here. So that's at 4 p.m. So that's Chicago. And we've just had the loan come back on for Chicago now. So Chicago could be making these runs. Chicago could be controlling the downforced area, which is going to be around 2,650 to 2,653. So yeah, with that being said, if this 2-hour time frame, or maybe even the hourly, you had the hourly up, didn't you, Judd? So
Yeah.
on the hourly here, if we do go push for push, let's have a look at the fib. So from 1 to 2 technical standpoints, we have these areas. Oops, wrong way. We have these areas on the fib, 1 and 2. There you go, right there. So we have the 88s, and we also have 666, and we have in between 78.6. So we've actually come into that area. If you were looking at longs in this predicament, stops would be below here. And the next level to the upside would be 2,700. But again, it depends on the ROI. If you guys have already made some money today, you guys have already made money today from the gold longs, and you want to, enter the market back and jump back in this Chicago precinct session, and I would just obviously put the volume down as to what you've already brought onto the table to minimize stress and risk. If we do consider another push to the downside, which might just be short-lived, again, we need to look at this daily concept that's more or less rolling forward. For copy and paste, there's the daily low. So copy and paste that over. And then the next area of pure value could go here. So if we actually do break yesterday's Chicago low at 4 p.m. yesterday, UTC +1, we could run through, take out the daily low, and then push into that daily area there. So let's have a look at this on measurements protocols. It's about 300 to 400 pips, but I'll be very, very cautious. That, just from intuition, looks like it's about to just take another lead to the top. But we have pushed significantly. We had 1, 2, 3, nearly 4, I want to say 3 massive daily pushes. And we could be in for a little bit of a head fuck, a little bit of a manipulation ride after all of these, perceived long elements to stand over. That's what I'm looking at there, guys. You know, that's what I'm looking at, and they're just a technical standpoint. Jordan has give out the fundamental points of the arena, and Mr. Dan has already gave you guys a decent buy trade as of today. So yeah, that's it really on gold, Jordan. That's all I can really put together. I don't really want to go over oil or anything like that because I don't want people to take risks on oil and
Yeah,
you know
oil's yeah,
it's
it's a bit more
it's
difficult, I would say.
yeah, it's not really worth it. I think everybody, well, the majority, it's up to these guys, you know, what they want to trade when it comes down to which instrument or maybe even any crypto or um, FX. But yeah, I feel like that's the overall consensus on gold. I've got some nice, clean-cut technical pieces on there. We got the main formula here for the down, sorry, for a bounce from this area is the volume. We got the daily low, and we've also got the Fibonacci. And the fib, again, the target has given us some nice highs, but we also have the other preconceived side where if we do break, we may be stab into it again, and then we're gonna push lower. But for now, we're still in the buy area. We're still in the buy. There's nothing really to say like start selling now. I would suggest wait for the daily closure and let's see how Friday morning comes out and see if we can actually get a little push lower. So yeah, I think all of that's looking pretty nice, relatively decent. One thing I forgot, sorry, let me just pull up the 4-hour time frame. So the 4-hour over here, let's see what else we can put on the table. So on the 4-hour, we have another small area here, okay, of pure volume. So the volume's been pushed through and the volume takes out 6 a.m. So this candle, 2 p.m., we've got Chicago taking out the pre-London high here, the top of this red spike. So we know this is a suitable area for volume. And you can see also at the same time, you've had taps on the top of the area. We haven't actually came into the mid region as of yet. And yeah, again, it's kind of still in that buy area, that buy zone, that buy precinct. But the other arena I will place onto the upside there, just to be cautious, is going to be the volume that's pushed through, the volume that's made the high, and then the volume that's come straight back down from the new. So even here, the other point of reference I would put on the table is if I bring this down into the 2-hourly using that 4-hour landscape, is if we push back into here and then we start to fall, we could get a decent sell opportunity, and it would look something like this. Decent sell opportunity from here to back into this arena, and then maybe even back to this downside, and that's the daily low there as well. So this is how we're putting things into perspective. And this is how we can build up models of the elements of risk reward by utilizing various time frames and then copy and pasting elements to the downside, and also having our timing preferences on there too. As I say, if we actually take out this area, we could backstab it, and then we could fly a lot. So it's kind of the RR on both ends are relatively the same. I would say 300, 400 to the downside if we do make that maneuver, and then to the upside, probably another 250 to 350. But it's just going to be a matter of patience. It's all about the patience element right now. And then here, hourly is the lowest I would go into, really technically, personally. So we can see how this one performs. But does that look decent to you, Jordan? Does that make sense? Like how I've just put all of those ribbons, technical ribbons on the table there.
Yeah, absolutely. I would say there's no rush to be getting into shorts now whatsoever, unless we start to see some major manipulation at the top and some clear reversal signals. Then, as I say, for now, it's very much buy the dips because there is no catalyst to send gold to the downside, in my opinion, right now. So, yeah, as Sean said, you guys, if you've made profit today on them longs, sit on your hands, as we say. Waiting it out is a legitimate strategy in this game. And right now, I wouldn't be entering major shorts, but as Sean stated, if we can pull back up into that northern region, then the risk reward is not so bad at all.
Yeah, and just one of those another small topic of conversation, guys. So I know many people are very excited to get straight into the trading arena when it comes down to executions, and overall, even just pieces of well, let's start with Jordan's standpoint on the fundamentals and running through that and knowing the research and back going back in time as to how the market reacted through other certain incidents, okay, in the same fundamental arenas, and also just know where we are month to month. We're coming to the end of the month as well, in a few days. So a lot of money could be coming out of the market, and this has happened for the last few months. We've seen it's either end of month or a full moon where the market's gone to the downside. And we just have to understand that timing is everything, even with all of the session times. At mid-month, start of month, end of month, we've got the full moon periods as well. They've been quite, ravenous recently. And also just the session areas, guys, the session times. I don't need to use personally the session boxes or anything like that. I just go through and I'll just take my time with the crosshair and I'll just go through and see where the highs and lows are. I will compare it with the daily highs and lows. And as you can see here, these are major manipulation factors. So a lot of these are going to prevent you from getting stung. They prevent you from getting stung and knowing when to maybe cut some of your positions out early, or just be happy with how much you've got from the market. If as up to date 200 pips, that's great. That's more than great. And yeah, I wouldn't rush things too much. Sometimes you just have to have that timing, end of day timing, see pre Asia timing, go into London, and then see which. If you go back and you can see, I was going through. Okay, Chicago had the moral of the rights in the last 2 days or so. So you might see a massive move here today. So Chicago's creating the volume, and you can see it here as well. The highs and lows which are formed in the midst of the previous day highs and lows. When you put these patterns together, you can actually see who's more or less creating the transcript for moving the money. And yeah, overall, psychologically, we can go deeper on psychology on the next webinar. But today we just wanted to, introduce Jordan for his first time on the webinar on new ones, and also just go some of the points of cause and factors and catch up with some of Dan's great work. And yeah, just give you guys a little bit of a heads up as to what to look out for and how to be, what's the word? How to be more secure with yourself and be more precise in knowing, yeah, okay, you're happy with a day, happy with a session. Give it some time, go have some fun, come back the next day. You know what I'm saying, Jordan?
Absolutely, yeah. I would say from personal experience many years ago, and then from speaking to some of you guys in the group, I notice you may have a good start to the week, and then you throw some of them profits back to the market come Thursday, Friday. And I think avoiding that specifically, you will see a huge uptick in your returns and your performance. As Sean stated, you have to be, it's all about confidence, but at the same time, pull the trigger when the opportunity is correct. Sometimes it means waiting for the opportunity and being patient. And I really do, it sounds cliche, but patience really, really pays in these markets. So if anybody was holding longs from 2,500 or sub 2.5, then, very, very big move, very good move. And for some traders, that can be, 2 or 3 of them per quarter or a year is enough. So jumping into the market, the more you trade, the more you risk giving your profit back.
Yeah, absolutely, absolutely. So, all right, cool. We'll save from here. We'll upload this for everybody, and let's see how the next few sessions play out, George. Okay. So,
Perfect.
guys,
Yeah,
thank you. We'll upload this today ASAP, and we'll shoot it in the Discord, and then we'll go from there.
Perfect. Yep. And then, yeah, if you guys, as always, any questions, we'll be active in the Discord. So just fire them over and we'll continue the conversation in there.
All right, mate. Cool. I'll chat to you in a second.
All right. Cool. Speak to you soon. Bye-bye.
Bye, guys.
Thanks, guys.